An FX trader is live trading euro dollar. An FX trader is live trading euro dollar. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. And our website is www.stochastic-macd.com. The title of this video is an FX trader is live trading euro-dollar currency pair, okay? So we are on the hourly chart and I'm just getting ready to trade the euro-dollar live here in front of you. And we will go through this together and see whether I will get paid or not, okay? So, referring traders to previous video that we have recorded, okay, at the George Trio YouTube channel, okay, we were saying to traders that the euro dollar, okay, is consolidating, okay, here you are, okay. I'll go instead to the weekly chart, okay. You can see that the euro dollar was consolidating between a level of 11352, okay, and a level of 10852 on the weekly chart. So it's consolidating. So the first thing that we do not want to do is to fight the current market pattern. It's a consolidation, so the price is oscillating between the level of 11352 and the level of 10852, okay. Now because this is horizontal channel, okay, the red line and the orange line here, all right, the price is now somewhere near the median line of the channel. I'm going to use Fibonacci retracement. So if you are a new trader, you don't know what is a Fibonacci retracement, I will send you to www.dayprotraders.com so you may also learn about Fibonacci retracement. So the median line of my channel, or the 50% Fibonacci retracement level of our, okay, channel is somewhere in the zone of 11101, 11101, okay? So, but if you pay attention to my moving average, simple moving at 14, the price is also very close to my simple moving at 14. It's just about to touch it on the edge, okay? It's about to touch it on the edge. I want you to pay attention carefully to what's happening here, okay, to the candlestick bar, okay, because the price is revealing to us what is happening here, okay. So you see the first candle here, which is touching the level of 11352. You see the price pierced through the level, it went above the level of 11352, but some traders sold it, okay, and the price went down big time. But there were some people who bought it, okay, around the turquoise horizontal line here, and they push it up a bit. I'm talking about this candle here. Let's zoom into it. I'm talking about this candle, my friend, this one here. So we can say that there were some people here who were buying the euro here, okay, though we were in a consolidation and very close to the upper level of the consolidation. This is strange because normally near the upper side of the horizontal channel, okay, the bear are selling. But it's very, very funny to me that there were some people there that were buying the euro in this zone. Talking about this candlestick bar. Now pay attention to this second candlestick bar. So the price continued to go down. So those who were buying here were taken out of the trade. Look at this candle again. Again here, near the moving average 14, there were again some buyers. Always the tail of the candle. Okay, so the price did open here, went up a bit, but they sold it down. As the price went down further, there were some buyer again near the moving average 14. So there were some buyer here. So we want to know where people are buying. So people are buying near the level of 11213, and people are also buying near the moving average 14. So because it's a bit risky trade, if I want to buy, I don't want to be the only person buying. I want to buy where other traders are also likely to buy. Now, I need to explain to traders, I'm talking about an FX trader. is live trading the euro dollar. I want to show traders how we handle risk in this trade, and this is a bit risky trade. So, because in normal condition, we should give priority to sell signal now because the price is going down from the upper side of the consolidation. All right, how do we trade the consolidation? Okay, so we want to buy near the lower part and sell on the upper side. Okay. All right, so if the price rises from the lower part of the channel, the horizontal channel, and it reaches the upper side, we want to take our profit, our bullish profit, and then look for opportunity to sell here. But because the price is going down, the best place to buy, we can look for opportunity to buy near the median line, which is a bit risky, which I'm trying to do now, and also look for opportunity to buy on the lower part of the channel. Okay. So the median line of my channel is a 11101, okay, below my below the moving average 14. As I explained to you, look at this weekly candle here, all right. There were some buyer here near the moving average 14. For day trading purposes, the price is very close to the moving average 14. I want to look for opportunity to buy also near that zone because I know that there are some people buying here. It is a risky trade. I'm aware of it, but I want to control that risk. All right? Okay, so this is what we see on the weekly chart. So we can say that my setup is that I recognize that some people are buying near the movement 14, and I'm also looking for opportunity to buy near the movement 14 if there is an opportunity to buy. If there is no opportunity to buy, I will not create it. I will not imagine it. I will not invent it. I need to see one. If I see it, I will take it. All right? I don't want to sell the euro now. I don't want to. Okay? So I'm going from the weekly chart. I see something that's interesting for me on the weekly chart. This is my trading setup. Now I'll go to the hourly chart. Okay? All right? My friend, pay attention. For traders that are learning the wave, the area wave principle, pay attention carefully, okay? All right? If the price is consolidating, if the price is in a balanced market, if the market pattern is a consolidation or horizontal channel, okay, we are likely to see during that time, okay, corrective wave pattern. Now, I know that you didn't get what I said. I didn't say that you did. You hear what I said, but you didn't get what I meant by that. Okay? I will say it again, and I want you to concentrate, or maybe later on, think of it. All right? We have three market patterns. Okay? I'm going to change my time and go back again to the weekly chart. Okay? And I want to draw a line on my chart. Okay? So, when we are trading, we use the market pattern on every time frame. If you are not doing that, I encourage you urgently to start doing that. Every time frame, ask what is the current market pattern. That will save you, okay, a lot of money, plenty of money, okay? So what I'm saying to you is this. When a market pattern is horizontal channel, for traders that understand the wave principle, we are likely to see during the consolidation period a lot of corrective wave pattern. Okay, this video is not about area wave, but I need to mention it to you because I'm going to use one right now in this video. This is about multi-talented trading. So, all right, though I'm a Forex trader, I'm trading, I'm using trend line, channels, okay, Fibonacci, area wave, everything that I know about trading. If I notice something, I want to use it, okay? All right? So that's why I'm mentioning this to you. The market pattern for the euro dollar on a weekly chart is horizontal channel, okay? It's a balanced market pattern. And during that time, we are likely to see a lot of, corrective wave pattern. Okay? Now we clarify that. If you want to know more about area wave and corrective wave, go to www.24areawave.com. I encourage all traders to learn a little bit about area wave. Do not discount it because will allow you to know what other traders are doing. It's good to know what other traders are doing and what tool are they using. If you don't know what other traders are doing, or you dismiss completely what other traders are doing, it's not the right way forward. I will just put it to you that way, okay? So this is the euro dollar, and I'm not interested to sell the euro today. I want to buy the euro. Okay, so on the hourly chart, I'm now on the hourly chart of the euro dollar currency pair, and I've seen a pattern. And this pattern is happening, it's a corrective wave pattern, a wave corrective wave pattern. And we see here a double top, okay? Something that looks like a flat correction, but is it a correct flat correction? But it looks like it. It looks like it, okay? So don't beat me on this one. It looks like it, okay? It looks like it, okay? Because this is not about area wave. It is about, okay, Forex trading, okay? Pay attention carefully. Pay attention, my friend. Pay attention, my friend. So at the top here, we have a double top. A double top is formed, okay, after a double retracement, okay? So we have a kind of a double retracement at the top here. Some traders may disagree with me in this case, which is okay. And all I say is my wave count, okay? That's okay. We disagree sometimes, but we're still friends. All right? So what I'm doing, I'm trying to call out my a flat corrective pattern. As I explained to you, you are likely to see a lot of area wave patterns, okay, during a balanced market, okay, during a consolidation. Look for corrective wave patterns. It will allow you also to navigate through this messy market. So we have a kind of a double retracement, 1, 2, 3, 4, 5. It looks like a flat correction. So this is not about area wave, but it looks like area wave pattern. So flat correction, because I understand area wave, and I see something that looks like a flat correction, and I ask myself, what's going on here? This looks like, okay, a flat correction to me, and it is normal that during corrective phase, during a consolidation, we may see all sort of a corrective wave pattern. It's strange, okay, strange. Okay, but it is normal, strange, but it's normal, okay? But now I want to apply my pitchfork tool. If you do not know about how to use pitchfork tool, I recommend to traders to go to www.dprotraders.com. So 3 points that we need to use, we need to select to use, okay, a pitchfork tool. This is my first point here on the hourly chart. This is my second point right here, okay, where my cursor is. This is my third point. As you can see now, okay, the price is on the edge of my pitchfork tool here, on the edge here. I also explained to you on the weekly chart where we are now, the price is quite close to the moving at 14. And in that region, looking at the previous weekly candlestick bar, we noticed that there were some people buying that zone. Okay, all right? Are you with me? See this session here? So if you see, the price went down and then went back up big time. Okay, but since then, since this bullish progression, the price did not display a new lower low. So with this information, I can say that right now on my hourly chart, the bearish momentum is diminishing. Okay, so here you see what 1, 2, 3, 4, 5 down. We are analyzing the price, okay, because it's the number one indicator. Okay, we'll talk about other indicator later. Okay, so price went down fast, isn't it? 1, 2, 3, 4, 5. Okay, down. And then after that, from one region, some people bought it here. That's why I was showing to you on the weekly chart, the tail of that candle. Let's go back again, okay? This exercise is very good for traders to see, okay, what they need to. So this is last week. Always you look at candlestick bar, analyze it. You see the tail, the shadow at the top, okay, the size of the body of the candlestick. Check all this. This is more, this candlestick here is more bearish than this one here. So I'll come back to candlestick trading later on and explain to trade a few things. So the tail of this candle near the moving at 14 tells me that there were some people who bought it here. This is what I'm trying to explain to you on the hourly chart now. Okay, this session here. Some people bought. But after this dynamic bearish progression down, remember, the market pattern on the weekly chart is still horizontal channel, yeah? Remember that, okay? It's consolidating. So I also explain to you right now, what I'm trying to do here is a little bit risky, but how do we control this risk? We keep eyes on the price. We analyze the price. We don't fight the price. We flow with the price. Looking at the price itself, there were some people who bought it here. And after that, though the price went down, we didn't go below this low here. So the point I want to say to you, as long as we stay above this low here when I'm moving my cursor, I'll prefer to buy the euro instead of selling it. But if it did below this level, in fact the level is in the zone of 11113, 11113. Okay? But this trade right now that I'm trying to take, which is a bullish trade that I'm attempting to trade, is a little bit risky because of the market pattern. Normally, as I showed you before, if you want to buy, we will prefer to buy at the lower part of the channel. Yeah, we prefer to buy on the lower part of the consolidation. But what I'm doing now, I'm attempting to buy somewhere near the median line of the channel. But by doing that, I'm a little bit careful. That's why I need to keep my eyes on the hourly chart to see what's happening here. Now, I have also drawn my pitchfork tool here on my chart, and you can see that the price hanging somewhere here. So my strategy is very simple, okay? I will show you now what I'm going to do. Okay, 1 second, please. I want to check something first. 1118360. Okay. Okay, I want to put a line where I will enter the trade, okay? See this candle here, the price went down from this bullish candle here. I would prefer to buy if the price goes above 69. Yeah. Okay. Yes. 5869. Okay, I'll buy it. I want to buy it. You see here how the price went down here in this section on the hourly chart and then roll it down. But if it goes back into this session here, these two candles here, it came down big time bearish. But the bull pushed it up. So there was some bull here that pushed it, okay? On the hourly chart. So if the price goes above that level, I'll buy it here. So what I'm doing here, I'm combining my weekly chart with my hourly chart alone. So I'm using at least 2 time frames. So if the euro dollar goes to the level of, in fact, 11171, I'm in this trade. Okay? Right there. All right, because I'm on the hourly chart, I want to put a green line there. Okay, with green line there. So, okay, I'll use a different color. Let's use pink so you can see it. That's the level I want to enter the trade. So from the hourly chart now, I'm going to go to the 3-minute chart. Okay. So as soon as I see on the, so we are now on the 3-minute chart. So what's happening here? What do we do? As soon as you change time frame, draw your market pattern. Okay, so by buying there, I'm not violating the market pattern. The price will be out of, by buying here, the price will be out of this bearish channel on the 3-minute chart. So it's not a bad place. And also looking at this 3-minute chart, there is a bit of support in this zone. All right. It's not a bad place. You see, some people also bought it here near my pink line. So it's not a bad place, okay? So all I need to do now is just wait and see whether somebody will bring it up into above this level of 11171. As soon as I see a candle close above that level of 11171, I'm in this trade straight away. All right? Let's see how long we have been talking now. We have been talking now for nearly 20 minutes. And you know now what I'm trying to do here. Okay, talking about an FX trader is live trading the euro dollar. All right. Okay. So I think at this point in time, we should pause the video to avoid that the video is too long. And we will come back to it and see whether, okay, my order will be filled at 11171. All right. So to summarize what we have said so far, you can see that I spent a bit of time on the hourly chart analyzing the price. The price. I have noticed, okay, a flat correction that has been completed here. Feel free to disagree, because normally we don't want to go a little bit deeper about area wave, because all I'm using here is that you will see very often during consolidation, you may see some specific area wave pattern, area wave corrective pattern, okay? Normally, a corrective wave will correct, okay, an impulsive wave, okay? A corrective wave will always correct an impulsive wave. But this flat correction, that's why I say do not beat me on that. It's just taking place because of the consolidation session. A consolidation is a correction. So when a market pattern is a corrective market pattern, like the consolidation, a balanced market, sometimes you will see during a consolidation, you will see clearly some corrective area wave pattern. You may not learn this in the past, but I'm telling you now to keep eyes. Whenever there is a consolidation, look for area wave corrective waves. I am not buying because of the area wave corrective wave, but I recognize that something looks like a flat correction to me here. But looking at the price itself, we know that the price went down 1, 2, 3, 4, 5 and displayed this lower low. Since then, the price went up, pulled back, but couldn't go below this low. With that information, we can say that, we can conclude that, okay, the bearish momentum that started here is diminishing, couldn't go display a new lower low. Therefore, I want to look for opportunity to buy instead of selling. It makes sense? If the bearish momentum was in place before, now it's no more strong as it was before, we can't afford to sell anymore. We want to sell when the bearish momentum is strong, okay? All right? And the only way we find out is by analyzing the price itself. This is what I'm doing here, okay? This is what I'm doing here. All right, this is what we are doing. You can have the best trading system in the world, whatever you are using, but you will do exactly what we are doing here. Analyze the price, keep eyes on the price, see what other traders are doing. So I've done the same thing again on the weekly chart. Normally, okay, my friend, if we want to buy the euro, the general rule is that we will buy it only if the price goes above the level of 11352. Go break above, retest, and turn around. I explained this to traders already. I just your YouTube channel. Priority to bullish signal above 11352. Yes or no? Because of the consolidation here. Now, here's the purpose of this video is to show a little bit of risky trade. I'm taking a little bit of risk. I'm aware of it, but I'm trying to show traders how we handle that. Will I get paid? We will see. Okay. So I use various tools, but the most important thing is that I was looking at the price. So last week, this candlestick bar, we see a tail, a bearish candle with a tail. The tail of a bearish candle is showing that some people are buying that zone. Okay. A bullish candle with a shadow, okay, is telling us that some people are selling at the top here. All right, it makes sense? It makes sense? All right? So there were some people buying here near the moving at 14. The price still in that zone. So one of the reasons why I want to buy is because some people bought it here before. Price went down all the way to the level of 11103. But some people bought it and pushed it up all the way to the level of 11195. Okay? Now, on the hourly chart in the same zone, I noticed that, okay, the bearish momentum that was developing is diminishing. Therefore, I must draw a line. I must draw a line. That's the level of 11371. If the price crosses above it, the price now 11170. Let's go to the 3-minute chart because it's coming very close to my pink line. And my order is now filled, my friend. It's now filled. Let's go to the 3-minute chart. You see now. You see now? Pierce. The pierce is yes or no. Okay, I'm in this trade now, okay? So now that I'm in this trade, entry point 11171, We need to now, because I know it's a risky trade, before they kick me out, all right, I need to start controlling the risk. For that reason, I need to go back to the hourly chart and I will set my stop loss. 11171, let's see here, 11171, 11148, 21, 30, okay. I'm looking for a candlestick that I can use. 111, let's see here. 11136. That's too big as a stop loss for day trading. Need to find a good place I can hide my stop loss. No, that's too big. 71. That's too big. Okay. 48. Okay. 7 30. I'll put my stop loss at 1141. Okay, 11141. That's 30 pips stop loss. Okay, so I'm going to put a line there, a red line. I'll use a 30 pip for this trade. Okay, so this line is in a zone of, I'll change it now, 11141, okay? 30 pip for this risky trade is not bad, okay? All right, so this is my stop loss. I'll color my stop loss into orange so you can see on my chart. Setting my stop loss on the hourly chart, okay? All right. That's it, okay? Now, talking about where I should get paid, okay? I'm risking 30 pip. I should accept at least 30 pip as profit. Sometimes, some traders may say to you that they never done it, but they are lying to you. Sometimes you will risk more than you get paid for. All right, but the bottom line is that you stick to the 5% money management rules. Okay, that's the bottom line. Sometimes it's good to, if you are risking 30 pip, you will expect 30 pip in return in normal condition. But sometimes we do risk more than we get paid for. But it's not, okay, the best approach. Okay, you shouldn't risk more than you are expecting to get paid for. But the reality is that sometimes you do risk more than you will get paid for, okay? But the bottom line is that you do not violate the 5% money management rules, all right? Okay? You don't want to violate that. You don't do it, okay? You don't do that one, okay? So talking about my target, 11171, that's my entry minimum, okay, 30 pip. I will expect out of this trade. I will expect to get paid more than that, okay. Okay, I will set my targets at 11210. I will see how it goes. If the market start going up and it suddenly slow down, I may decide to take my profit, okay? But for now, I'll set my target here. Okay, say 11210. Let's change the color of these two quads lines so everybody can see it clearly on the chart. 11210. Okay, that's my okay target. Okay, 11210. For now, I leave it there. Okay, 11210. Okay. So something like 40 pip for this trade, not bad. 40 pip is not bad, okay? 40 pip is not bad. All right, so my stop loss 111, okay, for 30 pips, and expecting a profit of 40 pips out of this trade. Okay, you can see that the price going down, back down. It's here now. So if you go to the 3-minute chart, as I explained to you, you see, I was filled here, and now the price coming back down. Okay, but I will stay where I am. I know the risk. Okay, and we'll see whether I'm going to get paid or not. Okay. So stay tuned, okay, as we are watching this live video. We have been talking now for 30 minutes. I will let it run for another 3 minutes, and then so you can see what's going on here. And then we'll pause it and come back to it, okay? Another 3 minutes, we see what's going on here. Okay, so the purpose of the demonstration about an FX trader is live trading euro dollar is to show traders how one can handle a risky trade. All right. The bottom line is to keep eyes on the price and use at least 2 times frame. Okay, this is critical, and do not violate the market pattern. Okay, do not violate the market pattern. On the 3-minute chart, as you can see, I'm above. Okay, the price was in a declining channel. Now it's out of the declining channel, and I'm filled right here. All right, this is a little bit aggressive entry in normal condition. On the 3-minute chart, we should allow it to go up a bit, okay, and then pull back to retest the channel or to display a higher low. That's in normal condition. But you can understand what I'm trying to do here. If I go back again on the hourly charts, okay, you can see that the price, you see, it went down, it's hanging on the edge of my pitchfork tool. So I want to trade on the edge of my pitchfork tool here, all right? Because the bearish momentum is diminishing, and I want to take a risky trade, okay? I'm expecting the euro to continue to go up more. I don't want to sell the euro today, okay? All right? I don't want to sell it. Some traders want to sell it because of the market pattern on the weekly chart. So I can explain to you the mistake that traders are making, okay? So the market pattern is a consolidation. So in normal condition, trader would like to sell here, okay, and take profit at the lower part of the consolidation, okay? That's normal. Okay, so they look for opportunity to sell near the zone of a 11352, and they prepare to take profit, okay, at the lower part of the channel, okay? That's the normal, in normal condition. But the mistake that traders are making at the time when they are about to buy or sell, they violate the market patterns, or they ignore the language of the price. So, though we should sell, when we are about to sell, we must have a signal. They do not have a signal. They do not have a signal to sell right now. So they are just selling. What they are doing, in fact, they are forcing it. Because on the hourly chart, there was no signal here to sell. In fact, we see that the bearish momentum is diminishing. If you look at this session here, if we draw a channel along this price session, the price was in a declining channel, okay? I don't want to draw it, this section here. When it went on 1, 2, 3, 4, 5, on the hourly chart, the price is out of this declining channel. And then it went up to display, to go up like this, and it pulled back, and it's just hanging here. It's not going below this low here. So there is no reason to sell now. In fact, on the hourly chart, we may say that there is a consolidation taking place here. The lower pattern went up, we see here, and then it pulled back here. So you want to sell somewhere up here. But in this reason, I don't want to sell now. Okay, I'm not saying that my trade will be definitely, okay, successful. With the information that I have at this point in time, I cannot afford to sell the euro. All right? If they take me out, great. But, all right? With the information I have, my analysis does not allow me to sell the euro. I have only one option, is to buy the euro at this point in time. Okay, there is no signal to sell the euro right now. None, okay? If we want to flow with the price, spend time with the price. On the 3-minute chart again, we have the declining channel. The price out of a declining channel again, on the edge of my pitchfork tool. All right? So we are already in this trade, and we are talking now, my friend. I hope you love it, and if you are still here, it's because you love it. So this is what's going on now. So as I promised now, we have been talking now for 34 minutes. I think it's time to pause the video. Some traders don't like it when we pause the video, but a live trading can go on for a long time, you know. Sometimes it can go on and on and on, but hopefully this will be quick and everybody can see the price action, and we get paid, and everybody's happy, and everybody learns something from it, and we take, we take it from there, okay? All right, but sometimes traders don't like it when I post the video, a live trading video, but you can't leave it on, or you're going to have a 2 hours recording, okay? So, should we pause it? All right? Now, many traders will say, no, don't pause it, George, let it run, okay? But we don't want the video to be too long. So let's pause it, okay? With your permission, let's pause it. And we'll come back to it and see whether I get paid or I get kicked out of the market, okay? So I put my turquoise vertical line. I'm on a 3-minute chart. The time in London, okay, is now, okay, 2 minutes past 10 a.m. in New York. That's 2 minutes past 3 p.m., okay, in New York. You can see that I entered the trade a bit too early. This is to show again the risk that is involved in this trade. Normally, we should wait until 10 a.m. Eastern time, 3 p.m. London time. When New York is open, we are trading Forex. Normally, we should wait that time, but you can see that I'm doing things a little bit different today. Is to show traders that sometimes traders do take risk, and it's good to see how we are handling it, okay, how we are managing it. So pausing the video at 3 minutes past 3 p.m. in London, 3 minutes past 10 a.m. in New York. So speak to you very soon, pausing the video for the first time after 36 minutes recording, okay? What's happening here? Okay, as you can see, the price is now, we pause the video here, where I place my vertical line. Now the time in London is 11 minutes past 3 p.m. Now 12 minutes past 3 in London, and 12 minutes past 10 a.m. in New York. And we are live trading the euro-dollar currency pair. And our entry was at 11171. The price went up to 11188, which is good. So it's now above our entry point, giving us more space to breathe, so to speak. All right. So now some traders are taking profit. So traders who bought it here, these are high frequency traders taking some profit right now. But I will not budge. I will remain my trade. And if you look carefully on the 3-minute chart, the moving average 14 is rising, okay, it's rising beautifully. So there are more to come. So we give it more chance and see whether it will hit our target, okay, all right, okay, all right, you remember we set the target, so we enter the trade, we set our stop loss, we set our target, and we just let it run, okay, let it run beautifully. Okay, so this is what's happening now. Pausing the video for the second time, and we will come back to it to avoid that the video is too long. Okay, so I'll move again my vertical line to the point where we are pausing the video. This candle is not yet completed, so I'll put it instead on this one. Okay, so we'll come back to it and see whether, okay, what's to show traders what is happening here, live trading, okay, the euro-dollar currency pair, okay? So speak to you very soon now. Pausing the video for the second time. The time in London is now 13 minutes past 3 p.m. In New York, 13 minutes past 10 a.m. Speak to you soon. The time in London is 26 in fact, it's now 27 minutes past 3 p.m. In New York, 27 minutes past 10 a.m. We have paused the video at 13 minutes past 3 p.m. All right. And we were here, and now the price went above. You can see that it went up a bit, and it's a little bit slow now because of the resistance on the hourly chart. Let me show you that quickly, okay? So you can see that on the hourly chart, there is a bit of resistance here. That's why some day traders and high frequency traders, speculators, gamblers, all right, are taking a bit of profit here. It's normal. Okay, so there's a bit of resistance in the zone of 11200, And as the price was approaching that level of 11200, some traders are taking profit now. Okay, so we need to be a little bit patient and see and wait. Okay, so that's why it's a little bit slow right now. Okay, see, some traders are selling it here. Okay, all right. So we give it more chance and we keep eyes on it and see what is going to happen. Okay, all right. So I'll pause the video again just to show you what's happening here. And before that, I'll move my vertical line to this point here again. And the time in London right now is 28 minutes past 3 p.m. In New York, 28 minutes past 10 a.m. If we go to the 30-minute chart, which is the, okay, you can see that a candlestick on it. See, we are here now, it's here, okay. So a candlestick is closed on the 30-minute chart. We have a new candlestick. So this is the candlestick on the 30-minute chart that brought the price into the zone of 11200. Now a new candle is now open again on the 30-minute chart, and we want to see whether the euro will go above the level, that resistance of 11200. All right, so it's normal that some traders are taking profit here, but I don't want to take my profit here at the moment. I set my target at 11210. I'm happy with it so far. So all I need to do now is to keep eyes on it and monitor it gently. Okay, so let's pause it again, and then I will come back to it. Okay, very shortly. Okay, pausing the video for the third time. Speak to you soon. The euro dollar went up, you can see went up to the level of 11205, only 5 pip short from my target of 11210, and some trader took profit before myself. All right, you can see here they took profit before me, went to 11205, and some trader quickly took their profit. I need to, keep my eyes on this trade carefully now, because I don't like this very much, that people take profit before myself. All right, so why we will give it more chance and see whether it will come nicely and fill it and go above it, okay? But right now I need to keep eyes on this trade, okay? All right, you see it now, the pressure of day trading. Okay, I'm going to change my time frame. I'm going to the 1 minute time frame. My screen is blank now, so I'm waiting for the data to come back. What's happening here? Okay, my data is gone for now. What's happening? All right, what's happening here? What's happening here? Okay, let me change, go to another financial instrument and see, I'm looking for, you can see that I still have data here, real time. You can see here, can you see on my chart, real time here, is back, you see here, real time. I'm using TC2000, you see here, real time, where I'm moving my cursor here. All right. So I don't know what has happened there. So I'm now on the 10-minute chart, go back again to my 3-minute time frame. And we are waiting for the euro to come to the level of 11210. So we can wrap it up nicely, okay? It's a bit slow now. Because if we go back again, my apologies to traders for that situation for the data. You can see we are in a resistance zone. You see, that's my target is coming, and it's now again at 11205, and there are resistance here. That's what traders are now very, very careful, because most traders want to come out in this zone. Okay, if it's taking too long, I may have to take my profit, and also come back later. Okay, because we don't want to come out all together. Okay, I would like to come out before other traders. I like to do that. Okay. So now we watch it carefully, okay? I was trying to go to the 1 minute time frame before I lost data. So what we are doing now, we are just waiting for the price to go to 11210. It went to 11215, and the traders are coming out. You see what usually happens, you see here, because some traders here came out, all right, down they are forcing other traders to come out, okay? You see that sometimes other traders, because they are coming out here, everybody say, what's going on? Why people are coming out so early? So everybody will come out now, and then the price will come down, okay? If it's taking too long, I will have to come out too, okay? But it's normal because of the resistance on the hourly chart. It's normal for day traders to take profit in that region. But I'm a bit greedy if you accept that. You may say to me, probably you are banging the table, Joe, why are you not coming out now? All right. I want to be a little bit patient more, give it more chance, okay? And squeeze that 10 pip out of it, all right? All right. I think I'm going to wrap it now because it's taking a bit too long now. I'm going to come out now, okay? Come out at 11219, okay? I'm out of this trade. That's it. That's enough for me. Okay, sometimes you take less than you expect, and then the price will go exactly and hit it. So I'm out and out of this trade. The price may go to hit the target at 11210 because many day traders are coming out at the same time in the same zone, and I don't want to be the last person coming out. The resistance on the hourly chart here, traders are paying attention to it. So now if you want to enter again, when we wait for the price, okay, to go above the level of 112, go run away from it a little bit, okay, have enough room, and then pull back, and then form a higher low, okay. By looking at the time of the day, okay, it's now 42 minutes past 3 p.m. in London, and in exactly an hour, 18 minutes, okay, London will be closed. So we want to day trade during the best time of the day, and we don't want to hang around too long. We want to get paid, and then we get out, okay? We want to trade only during the best time, the first 2 hours, when a market is open, all right? If you get paid within the first hour or two, that's very good, okay? So I'm out of this trade now, and I hope you learned something from this video. My initial exit target was at 11210, but as you can see, a few traders were coming out here. But in my view, they probably continue to go up more. But I don't want to be around here seeing other traders coming off before me. I don't like that, okay? So I decided to come out at 11199. It's not bad, okay? 28 pips, all right? It's not bad. I was expecting 40 pips, but you can see that I take less profit in comparison to the risk that I was taking. This is what I was explaining to you. And because of the behavior of the price here, I was forced, so to speak, to come out of the trade earlier than I was planning to do, okay? All right. So to summarize what I've done today, I noticed that there were some buyers on the weekly chart. Okay, going back again. All right. We noticed that last week I have too many lines on my chart now. My apologies to traders. Okay, let's remove some line here. And to summarize this video quickly, and then we can wrap it up. Okay. So I noticed that there was some buyers here. This is the tail of last week, okay, in this zone, all right, near the moving average 14, all right. Now I switch to the hourly chart to see whether, okay, the bearish momentum was diminishing. We noticed that on the hourly chart, the bearish momentum that was developing from this point down to this point is diminishing. I set my entry point at 11171. The price slowly but gradually filled the orders, and I set my exit target at 11210. Okay, because of the resistance on the hourly chart, many day traders were coming out of the trade around the zone of 11200, forcing me to come out earlier than I planned to do. Instead of taking 40 pip, I have taken 28 pip for this trade. As you can see, it was a profitable trade, but in this case, the risk that I took was 30 pip. The initial exit was 40 pip, but now I was forced to take less, profit than I was expecting to take. But at the end of the day, it was a profitable trade and was not too stressful. As you can see, the order was filled, and since the order was filled, the price did pull back a bit, here in this session, a little bit, but then it just went up, which is nice. We don't want it to be too stressful. As you can see, the price still hanging here. This is what I don't want to go through. I don't like my trade to be stressful, so I decided to cut it and go. Okay, if you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. Okay, if you have any suggestion, any question, put it in the comment section. All right, if you truly love this video, all right, feel free to share it on Google Plus, on Twitter, and also on Facebook. If you love our videos, okay, great, feel free to subscribe to our channel. You'll see a link in the description area where you can subscribe to this channel so you do not miss live recording like this, talking about an FS trader is live trading the euro dollar. We are the GSTW24 traders talking today about an FS trader is live trading the euro dollars. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders. Speak to you soon.